Hi, everyone. We have a lot to go over tonight, so I just want to start it off with our full sells. Obviously, the full sells are going to be stocks that failed their ultimate final cut loss lows. BDX we're getting out of. DHI was a dangerous long, and that's why we kept it small. We're going to get out of that one. AAOI, we're already out of 75% of it. Now we're going to get out of the rest of it. Tor, the new long, ugly reversal. Thank goodness we got a good fill, or else that one would have hurt just a little bit because, like I said, we've kept all of our longs to 2.5% positions, and our biggest long positions have been the 5%ers, and they've been only REITs outside of REITs. And then earlier on, when the rally was brand new, around the June levels, I guess you could say the May June levels, when we started a rally off the lows in the Russell 2000 in May and June, we went 5% in some New York Stock Exchange stocks. But overall, we've been pussyfooting around because it's it's been a dangerous uptrend, and now we finally are starting to get some real cracks. So the Nasdaq lately has been trading very bad. So some people, including myself, were thinking this could be consolidation. The hint that it wasn't by yesterday was look at the closed bar days, and then even on the days when you're up, we're barely up, and we even finished down. We gapped down so bad one day that it just really wasn't great price action. Now we have another sell-off, this time on above average volume. After the above average volume up day yesterday, which I reminded you, since we pulled back like we did off the highs and had the high volume, we had all those breakdowns and gap downs, and we had the action out there in the biotech sector that warned about today's significant price break. So following all that those poor reversals yesterday, we finally got the big down day today. So with today's down day, all of our models have switched to neutral levels, despite the S&P 500 and Dow Jones Industrial Average and NASDAQ all trending above the 50-day moving average. The way the individual leading stocks and the way that those speculative stocks, those super performers, should have acted is all indication that this market is tired. Also, on a ratio level for the total number of bulls to the total number of bears on the IIAA surveys, there has never been such a bigger gap with so many more bulls to so few bears than we saw just recently. So the market's very skewed. And based on some of the conversations I have on StockTwits forum, where I post some technical analysis of charts, there are some very passionate perma bulls up here that are way too focused and or in love with a stock to be healthy. So with all that being said, the breakdown today in the Russell 2000 is confirmed via sentiment. This is not a normal break. This is a very significant break. We're breaking down below the 50 and 200-day moving average all in one day. It appears the 200-day moving average, as it's flatlining, wants to roll over, and the Russell 2000 might see a death cross pretty soon. That's when the 50-day moving average turns below the 200-day moving average. So we've got a pretty negative setup here. We're already short this market via long positions in retirement accounts and SRTY, and put positions within the money put contracts on IWM. But SRTY here, I want to add to this position. 2.5% can't be 5% because we are so far extended from the July breakdown. What we're going to look for here to add a bigger position is for hopefully prices to consolidate sideways, or hopefully rally a little bit in the overall market to resistance points. And the key resistance point obviously here would be the 50-day moving average, and or you could also do the intraday high of 714. Key levels. If we can rally there on low volume and then re-break back down, then we can start going 5-10% in our inverse ETF positions and take on bigger put contracts or sell calls if you want to. And then also tonight, with the way that SanDisk broke down following earnings today on huge volume, and the heavy volume reversal following an Intel gap up, once again, this is not good action. And if you want to see a funny conversation, go and look at KNDI on StockTwits and look at how these people are reacting. I made mention that following the buyable gap up, I love the way that this pattern looked and was looking for a handle. Then we had a very ugly intraday reversal. Made mention of that. They got pretty upset. Then I made mention of today's horrible intraday action in the stock, and they got very upset. But action like this is not good. We're seeing these kind of reversals everywhere. And with the breakdowns in stocks like Kiwi, AN, SID, YUMM, or YUM, excuse me, Mattel, FITB, and DHR, you can see things are very, very ugly. And let's consider all new long positions aren't working. Now the REITs are working, but they're barely working. RSE is close to having to be removed as a new long position. The other new REIT that we took long is still holding in, but it could easily fail and be reversed. And HST. Once again, these are all our 5% positions, but even HST, as you can see, didn't act great today. So outside of REITs, it's pretty ugly out there. So defensive measures need to be raised here. And then, like I said, going back to SNDK and Intel, SOX S and SOX L, it looks like this is a fresh breakdown. Look at that volume on this ETF. Not good at all. SMH, you can see confirmed there, and we already saw Intel and SanDisk. So we're going to go ahead and add a 2.5% position in SOX S. It would be bigger, but like I said, pretty extended in the overall market on the downside in the Russell 2000 and NASDAQ. So I would like to see a little bit of more bounce, more of a sideways movement, flattening of this 50-day moving average. It's still trending down. The 50-day moving average is rounding up and going higher. I would have no issue adding more than 2.5%. But since we're going to have to be wrong by at least 8%, on the remaining position, it's just going to be a 2.5% position. So SRTY, we're adding to our current hedge against our longs, and we're slowly getting to be cash heavy, short long neutral with our positions. And then also SOX S is the new position, 2.5% of capital in both. Thank you.